Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 18th of April, 2017, tax day in case you forgot about that. And we are going to be talking at this point in time the interesting day in the metals, because look at how gold held this 1280 3/4, coming up back to 92.5. Even the silver, it's almost, 27 cents off its lows. The market that fell apart today, the copper, the palladium, the platinum, they all got hit. But this market is still very worried about what's going on with North Korea. As they've said, they're going to do weekly, monthly, yearly tests of their missiles, their nuclear program. They're going to do what they want to do. Now, you might think that China can control them. Folks, the trade with China, I think on year-over-year basis, is up 40% from what it was with North Korea and them. So, yeah, they got rid of the coal imports, but what about everything else? I don't know that President Trump can get the Chinese to do what he wants. You ever wonder about that aircraft carrier, our Carl Vinson? You do know it was going the other way when the Pentagon said it's on its way to North Korea. Folks, it was 3,500 miles away. So if you've wondered why it's taking 3 weeks, these things don't travel at lightning speed. It's a whole carrier group, obviously. It'll be there next week, and that's when I think this market's starting to look over its shoulder, wondering what's going to happen. But as we get to the gold weekly chart, this is a new high move for this leg since December as the market has come up on the weekly chart. Obviously, we've got numbers up here in the 1340s that you've got to be looking at. We'll see if the market can reach as high as that. When we come to the current thrust of the market, it's gone from the current thrust, 1248. Yes, you can argue it's closer to the 1200 level, but when you broke down on a closing basis here, you made the lower low. So it's gone straight, basically, with the higher pattern of lows and highs since 1248 to today's settlement price of 1294.10. I realize it's trading at 1292.70, but understand the market settles at 1:30 Eastern Time, 12:30 p.m. Central Daylight Time. Here's what the chart looks like up here. And as you can see, it still has plenty of momentum. It's got higher lows, higher highs. It's all looking good at that point. Here I'm showing you something I haven't shown you in a while. The 200-day moving average of closes. And what's happening for a change is we've got the 18-day average of closes starting to hone in on it. That hasn't happened in a long time. You'll get a crossover with it. Now, the best crossover is the 100 and 200, but that's going to take a long period of time if it happens. The one I'm looking at is this one, and I think other traders are as well. When you look at the resistance, it's very clear. It's the upper Bollinger Band, but now they're doing this. They're widening themselves out. They narrowed in for a bit. They don't want to spend any time going sideways. That's fairly evident at this point. The stochastics are in an overbought condition, but for the first time, they're lining up to begin the embedded process. But they're still overbought, which means this market is vulnerable right here. The July silver gold ratio, still in that upthrust that we pinpointed for you from here. How high it's going to go, I can't answer. What I did say is I think it would be a major event to close over 71, and now if you close back under, let's call it right here around the 69.30 level, 69.25, that could be a sign that this phase of the rally is coming to an end. Right now, gold is stronger than silver, and clearly so. You can see on this chart you've got a higher high and lower low. That's a warning sign. Silver today falls right back to the 18-day average, finds its support. Unlike the gold, it's an overbought market that is attempting to give us a correction. The copper market breaking out to the downside. So now you've got a clear-cut pattern of lower highs, lower lows, and something else has happened. I want you to keep your eye on the red and the green right here. Notice that we got the crossover where the 18 got under the 100. You still have it, and now you're getting the new lows off of that move. That's called a bearish crossover, and you've got one there. By the way, let me come back to silver for a minute here. I don't know if I put it up on this chart now. I wanted to. I wanted to put the 200-day average of closes because you're fighting at it right now, just like in the gold market. In the platinum, due for a correction apparently, you've got the lower low, the higher high, the upper Bollinger Band in black is stalling it out. You're also stalled out in momentum. Good support back here at the combination of the 100-day and the 18-day average of closes. Should you get a crossover and prices are above both, could be a sign that the market's ready to move to the upside. I think that this is going to stymie the market, the fact that it's just staying overbought. At the same time, the palladium market is collapsing into an oversold condition with a higher high and a lower low pattern. First day under the lower Bollinger Band means it might make a run for that 100-day average, but the further it goes down now, the better the chance of it finding support. Dollar got smashed today. There's no other word I could use for it. It's nearly 80 points lower. It just caved in. It had been fighting a nice battle, trying to figure out what to do from the 18-day average of closes. Momentum had turned itself down, and today it was just a cave-in. If it wants, it's not going to be very hard to run to that lower Bollinger Band. So I put it all together, and I just see a bearish picture for the dollar, nothing very friendly at this point. Now, I want to talk to you about a free offering from our good friends at Modern Trader Magazine. 1-year subscription free from them. And as far as I know, we're the only firm that they're allowing to do this, by the way. And it's a print. Well, you don't get the print edition. You're going to get the email coming out. Now, you can print it, and they've got a built-in reader. It reads just like a booklet, and we've all used those by now. But it's everything from the ETF, stock market, options market, derivatives, ideas on fundamentals, ideas on chart trading, patterns within patterns, chalk and indicator in this one. So if you're a techie as I am and you like to read both the fundamentals and the other part of the market, well, the daily stories that go with the once-a-month publication, the May edition, perfect for you. Call us. Go to our website. You'll see a carousel of free offers, or click right up here. And when you do so, the carousel will appear there. Fill out what you want, but you can see quite a bit of great information, long-dated yield curve flatness. How appropriate is that right now for what's going on in the bonds and notes? You have a good day. I will talk to you all later.